Hey everyone, and welcome back to the channel. Today, we're diving deep into one of the most powerful and popular momentum indicators out there, the stochastic RSI, or as it's more commonly known, the Stoch RSI. If you've ever felt like the standard RSI was a bit slow, or you've been looking for a tool that can give you more frequent trading signals, then you're in the right place. By the end of this video, you'll understand what the Stoch RSI is, how it's different from the regular RSI, and most importantly, how to use it effectively in your trading strategy. So, grab a notepad, and let's get started. First things first, what exactly is the stochastic RSI? Put simply, it's an indicator of an indicator. That might sound a little confusing, but it's actually straightforward. The Stoch RSI takes the Standard Relative Strength Index, or RSI, and applies the stochastic oscillator formula to it. The goal is to generate more overbought and oversold signals than the standard RSI would on its own. While the RSI measures the speed and change of price movements, the Stoch RSI measures the RSI's momentum. It essentially tells you where the current RSI value stands relative to its recent high-low range over a specific period. So, why would you use this instead of just the plain old RSI? The main advantage is its sensitivity. The standard RSI can hover in the middle range for long periods during a trending market, giving you very few signals. The Stoch RSI, on the other hand, is much more volatile. It oscillates between its 0 and 100 levels much more rapidly. This increased sensitivity means it provides more frequent trading opportunities, which can be particularly useful for short-term traders, like scalpers or day traders, who need to get in and out of the market quickly. It helps identify short-term overbought and oversold conditions that the standard RSI might miss. Now, let's break down how to read it. When you add the Stoch RSI to your chart, you'll see two lines, the %K line and the %D line, oscillating between 0 and 100. The %K line is the main Stoch RSI value, and the %D line is a moving average of the %K line, acting as a signal line. You lines also see two important levels marked on the indicator, the 80 level and the 20 level. Generally, a reading above 80 is considered overbought, and a reading below 20 is considered oversold. A crossover of the %K and %D lines within these zones is what generates the trading signals. Let's talk about the primary signals, overbought and oversold conditions. The classic interpretation is to look for selling opportunities when the indicator moves above the 80 level and then crosses back down. This suggests that the upward momentum is fading and the price might be ready for a pullback. Conversely, when the indicator drops below the 20 level and then crosses back up, it signals an oversold condition, suggesting that selling pressure is easing and the price might be poised for a bounce. A key signal is when the %K line crosses above the %D line in the oversold zone that is your potential buy signal. The sell signal is the opposite. The %K line crosses below the %D line in the overbought zone. But here's a crucial pro tip. Never use the Stoch RSI in isolation. Because of its high sensitivity, it can generate a lot of false signals, especially in a strongly trending market. For example, in a powerful uptrend, the Stoch RSI can stay in the overbought territory for a very long time. If you sold every time it crossed down from 80, you'd be fighting a strong trend and likely lose money. This is where context is king. You need to combine the Stoch RSI with other forms of analysis. The most effective way to use it is as a confirmation tool within a broader trading strategy. One of the best ways to do this is to use it in conjunction with trend analysis. First, identify the primary trend of the market using tools like moving averages or simply by looking at the price action. Are we seeing higher highs and higher lows for an uptrend or lower lows and lower highs for a downtrend? Once you know the trend, you only take Stoch RSI signals that align with it. So, in an uptrend, you would only look for buy signals, that is, when the indicator dips into the oversold area below 20 and then crosses up. You would ignore the sell signals from the overbought area, as they are likely just minor pullbacks within the larger uptrend. In a downtrend, you do the opposite. You only look for sell signals when the indicator becomes overbought and then crosses down, and you'd ignore the buy signals. This simple filter can dramatically improve your success rate. Another powerful technique is to look for divergences. A divergence occurs when the price is making a new high or low, but the Stoch RSI is failing to do the same. There are two types, bullish and bearish. A bullish divergence happens when the price makes a new lower low, but the Stoch RSI makes a higher low. This indicates that the downward momentum is weakening, and a potential price reversal to the upside could be coming. This is often a very strong buy signal, especially if it occurs near a key support level. On the flip side, a bearish divergence occurs when the price makes a new higher high, but the Stoch RSI makes a lower high. This signals that the upward momentum is fading, and the price might be about to reverse downwards. This can be a powerful sell signal, particularly if it happens near a resistance level. Divergences can give you an early warning that a trend is about to change direction. Let's discuss the settings. The default setting for the Stoch RSI on most platforms is a 14-period lookback. This means it's calculating the stochastics of a 14-period RSI. For most traders, especially those just starting out, this default setting works just fine. However, you can adjust it. A shorter period, like 8 or 10, will make the indicator even more sensitive, giving you more signals, but also more false ones. A longer period, like 21 or 30, will smooth it out, giving you fewer, but potentially more reliable, signals. My advice is to stick with the standard 14-period setting initially. As you become more experienced, you can experiment with different settings on a demo account to see what works best for your specific trading style and the asset you are trading. Let's walk through a hypothetical trade to tie it all together. Imagine we're looking at a chart of a stock, and the 50-day moving average is clearly trending upwards, telling us we're in a medium-term uptrend. Our strategy is to buy the dips. We wait for the price to pull back towards the 50-day moving average. As the price touches or gets close to this moving average, we glance down at our Stoch RSI. We see that it has dipped below the 20 level into oversold territory. Now we wait for our confirmation signal. A few candles later, we see the blue %K line cross above the red %D line, still below the 20 level. This is our entry signal. We have the trend in our favor, a pullback to a support area, the moving average, and a confirmation from the Stoch RSI that momentum is shifting back to the upside. We could then place our stop loss below the recent swing low and set a profit target at a previous resistance level. This multi-layered approach is far more robust than just blindly buying every time the Stoch RSI is oversold. To sum up, the stochastic RSI is an excellent tool for identifying short-term momentum shifts and potential entry points. Its main strength is its sensitivity, which provides more signals than the standard RSI. However, this is also its main weakness, as it can lead to many false signals if used alone. To use it effectively, always confirm the primary market trend and only take signals that align with that trend. Look for powerful divergence signals as potential early warnings of a trend reversal. And finally, combine the Stoch RSI with other tools like support and resistance levels, moving averages, or chart patterns to build a complete and robust trading strategy. Remember, no single indicator is a holy grail. Success in trading comes from a well-rounded approach, good risk management, and discipline. Thank you so much for watching. I hope this breakdown of the stochastic RSI has been helpful for you. If you got value from this video, please give it a thumbs up. It really helps the channel out. And if you haven't already, make sure to hit that subscribe button and ring the notification bell so you don't miss any of our future trading tutorials. Drop a comment below if you have any questions or if there's another indicator you'd like me to cover. Until next time, trade safe and trade smart.